Good morning, folks. I apologize for my tardiness. I was supposed to do this review last night, but my sons had an issue at their home. I had to take care of that, and here we are. So, the NASDAQ, right? So, I talked about yesterday in the Telegram channel. I started the morning session off with a very modest bullish bias, and I'll explain what that meant. And for the folks that are brand new or just simply just don't understand what it is I'm referring to, I started the morning session off very, very early with an annotation posting an interest in the 20,430 level, which is this low here. This was yesterday's low. It was trading in that direction. Okay. What I wanted to see it do was go up into the 21,453.75 level. And I told everybody these levels here, I went through the charts from daily down to 1 hour, 15-minute, 5-minute, 1-minute chart. And what I wanted to see was I wanted to see it go up initially and then gravitate down towards this low. That was the whole premise. The first post I gave yesterday in Telegram channel was this level here, which was this low. So obviously, you can see the market did in fact try to work towards that level, but it failed to get to its old low. I don't think we're done. Okay, I think that it's still viable. It's still likely, but it needs to do, short-term retracements, consolidations before it eventually gets down there. And then this low here. Okay, so you're probably thinking, well, why am I jumping over these two here? Well, because if it's going to go below here and accelerate, why just take these lows out when this one here is your base before all of this rally up? Okay, so we cleared all these relative equal highs out once we worked this volume imbalance, rallied higher. And then you're probably thinking, oh, you just hit a volume imbalance because it was labeled as kind of like a pseudo volume imbalance. It's a gap, but I use some of the rules for volume imbalances in there. You can see how it was a very challenging area here, then rallied above like we were looking for, and then it gave up the ghost and broke lower. But I posted these levels in here yesterday, and I'll show you on the 60-minute chart. Okay, and that's what it looks like here. And that's where the buy side was initially. And then this inefficiency from here, that low, this candlestick's high, I refined it further as we went lower. So we go into a 15-minute time frame. And then there's the candlestick's low, and then this candlestick's high. That was the inefficiency. And see how smooth that is? Really, really smooth. And I wanted to see it at the open in here. I wanted to see it go up and unsettle that, make that jagged, and then trade down into the first level I gave yesterday morning, really early, which doesn't appear to show up on this time frame. But basically, this level right there. Okay, you can see we got real close to it. It just simply didn't go up there and take the buy side. Okay, so that's not an incorrect bias. Okay, it's an idea to anticipate the daily range forming. So in other words, where it opens, we want to see it trade out, create a juice swing, and then trade down to the level I gave guidance on at 20,943. We'll drop down to a 5-minute chart. Okay, and 930 opening price. Again, I wanted to see it get above this box, which we'll see on the 1-minute chart. I wanted to see it act as an inversion fair value gap. I wanted to see it trade above it, come back down in, respect only the upper half, then displace in the next fair value gap. After that, I would have used to get long to run into that buy side, then take the long off, then look for a short. If it would have broke below first presented fair value gap after taking the buy side, that would have been a very, very easy model setup that I'm trying to employ for 2025. But it just simply wasn't able to do that. It just did not have any kind of interest at all to want to go higher. It just melted and just kept going lower. Dropping down to a 1-minute chart. Here's your new day opening gap. All right. And there's your 20,943 level. What I had in mind at the beginning of the Telegram broadcast yesterday for February 25th, 2025. All right, so let's get in here and break this down real quick because I don't want this to be a very long video. So up here is the buy side and where all those smooth highs are. So if we keep going back to the left, it's all of these highs, all what I showed on the 15-minute time frame and the 1-hour chart. So we have the opening price here, right there on that candlestick. And we break down, we create the very first fair value gap, which is this little blue one. And I wanted to see it trade above this inefficiency. I'm using the volume imbalance in here for the low it. And I want to see it trade above it and close outside of it. Now, it has to do this after 9:30. So here's 9:30. So I want to see it trade above this. That's what I had in mind. I had a modest bullish bias, which was limited to the very thing I noted, these smooth highs. I said they were suspect or too smooth. Okay, so if you're a student of mine, you know what that means, that we're likely to go up there and make that smooth edge jagged. So that means it's going to do what? Go up there, disrupt it, and then what was the other level I started the day with? 20,943. Okay, so that's why I emphasized I have a modest bullish bias initially going into the opening because I wanted to see it go up into these things. Just to simply go look at the posts, folks. I get it. There's going to be people that simply want to take things out of context because they want to sound smart, but they're looking foolish. So the point is I wanted to see it trade after 9:30. I want to see it trade above this inefficiency and act as a bullish inversion fair value gap, tongue twister. Rallies up. And if it comes back down and supports price and doesn't go back in the lower half of it, then I want to see it make a run on here. But I have to see this inversion fair value gap produce the support structure, then a small little 1-minute inversion fair value gap. Then I could have went long there, and that would have been a run into that. So I would have used whatever that little short-term scout would have been to take that exit, reverse, and then go lower. And then if it would have went below the first presented fair value gap, I would have added or pyramided another entry there. But as you can see, it just simply did not give that run up there. It just stayed extremely heavy and is folded over. Now, this inefficiency, I think it's a 15-minute time frame. I didn't label it. This is why you want to label your stuff when you're doing your annotations. Yeah, it's the 15-minute time frame. So this inefficiency, I had that noted as well. It broke through it and came back up and acted as resistance. But the long and short of it is we had no interest at all to go up and clear that smooth area of buy side. So I had to eventually just get in line with what the market was doing and look for shorts. Market trades up into the lower half of that fair value gap. It breaks lower. We have a fair value gap there. And I said, we'll see if it wants to behave as an inversion fair value gap. If it fails to do so, it breaks down below it, then that means the consequent encroachment should be a what? A barrier to it. So it's a failure to launch off of this inversion fair value gap. There's your entry. You can go short there. We have a fair value gap here. That's a SIBI. Trades up to consequent encroachment there. Trades up into the lower quadrant. Fells off. Volume imbalance noted. All these things were noted as it was happening, posting it on the chart. I've tried to do yesterday very little text descriptions, and I let the chart do the talking because there's a language barrier still for a lot of you that don't know how to, I guess, follow me in English. I'm trying to make it where it's visual. So if I'm showing you a chart and I'm drawing annotations to it, it goes into an area where I don't have to say anything. You know what I'm pointing out an interest in. You know what I'm showing attention to. So that way you can kind of like follow along without having to have any language barrier being an issue. So volume imbalance here, trades up, hits it, sells off. And then we have one more area in here where I wanted to see this stay open. It did. It broke down. And I said this was the last line of defense, which was this little gap in here. And I wanted to see that basically act as an inversion fair value gap. And initially, it showed signs that it was wanting to. It got down in here. And then once we entered back into the upper half of it, that was all she wrote. Okay, so that means it was going to trace back up in, stop me out, which is what it did. And it was in profit. I took partials along the way. And you're welcome to go and look at the Telegram and see how the trade was managed and where the partials were taken. Initially, I took more off in the beginning of the trade because I wasn't comfortable holding the risk that was on the trade because I was put off by not seeing the relative equal highs taken, and all of this banging around in here just made me more reluctant to hold the size. And it wasn't even that big of a trade, but just for me to be able to call it live and manage it live in front of everybody. It's like 80,000, 88,000 people in there now. I wanted to make sure that you saw me do those types of things, not just simply, I could put a position on 30 contracts, and then walk it down there and be like, yeah, this is easy. Yesterday was not easy. It has not been easy for the last, since 2025 started. So I want you to know, as I said on X, if anybody's trying to promote the idea that trading right now is very easy, they're liars, okay? And they're just trying to make an image for themselves. I promise you, they're sweating. Everybody's feeling it. It's hard. So you have to be very, very nimble, meaning that you have to be very careful how much risk you're putting on the trade. And you have to be dialed in incredibly tight, because if you don't know what it is that you're trying to do, and you don't know what the market's in a high degree of probability likely to do next, and that's very hard to determine right now, even for me, because there's a great deal of manipulation going on, and the volatility is absolutely insane. So that climate, that condition, that environment for trading makes it extremely difficult. And these young guys that come out there and they just recently started to learn how to trade, they're letting their initial luck blind them into thinking that they're far better than they really are. And I experienced that too when I was 20 years old. But given enough time, these markets, if it stays in this type of environment, it's going to slap people around, and eventually it's going to slap me. I'm going to get it wrong in front of you, legitimately get it wrong, and it's okay when it happens. It's going to be okay for you to see it. It's going to be okay for me to endure it, because I'm letting you know in advance that these are very challenging conditions, even for me. So eventually, the market did trade back up higher, and we made a lower low than these relative equal lows here, but that was it. And then we retraced back all the way in through the afternoon. And let's take a look at what we have going forward. Here's our new day opening gap. Let's mark those real quick. And so we have basically ran out a level I was watching before I sat to do this recording here. I think we're going to return back into, there it is, buy side here after they unsettled these lower smooth lows. That's what I was looking at up here, and it went down, took that, and then this was the next objective here, and it has done that. I think that it would be, if it doesn't completely fall out of bed, return back to yesterday's first presented fair value gap, and then maybe go up into those smooth highs, which are here. So looking at 21,453.75, even trading up there, it is not something that would unsettle the overall bearishness. See all the highs here? High there, here, and there. So there's a nice pool of liquidity there in the form of buy stops. So even if it went up there and knocked those individuals out and then resumed going lower or go higher, that's the benefit of looking at the things I'm teaching. It doesn't require you to be correct about bias. It doesn't require that. We're looking for logical, easy, low-hanging fruit objectives for liquidity to be tapped into. And if we focus on that and make that our sole purpose in framing setups, it makes the whole aspect of sitting down and hunting setups a lot more fun because it's not a lot of moving parts to the equation. It's simple. You're just looking for things that need to be made jagged. Okay. And we've done that down here after we've had a series of almost a week of straight down days. So again, going in this morning, I will be looking for some reason to see price go higher until it forms some kind of a contrarian, you know, setup that tells me I'm wrong in that aspect. So then I would eventually get in line with the market like I did yesterday. So again, I'm not trying to pick the bottom. I'm just looking for the logical, easy expectation would be everybody's bearish right now. Like everybody wants a short. Everybody has a short on. That's my thinking right now. So where's the pain going to be most felt for the individuals that are short? And they're going to squeeze on them. It doesn't mean it's going to go up 1,000 points. Doesn't mean it's going to go up 500 points. It just means that it can go up a couple hundred points. And that's nothing in the grand scheme of things if we're ultimately going to go down to levels like that low and these lows here because they're relatively equal. And we're just banging still into this very large trading range. And that range is sloppy. It's not well organized, which makes it, again, very, very challenging to pick the right levels to get in with a very small risk stop loss. And it's very challenging. And I'm just going to leave it at that. I don't want to beat a dead horse, but it really is that straight and cut forward. It really is that clear and cut and straightforward that it's challenging at this moment. So if you're feeling it, if you've been apprehensive or reluctant to take a trade, great. That's exactly how you should feel right now. Because unless you know what you're doing and you know exactly how your model is to be implemented, chances are you're probably going to end up getting hurt or losing money or going into the drawdown simply because you're trying to trade because there's opportunity based on the time in the market being open. That is not what a professional mindset trader does. They look for high probabilities with low risk and easy framework where it's just almost like a guarantee that they're right on their direction. It's likely to go to this very clear level and they're weak for their setups. And that's not easy to do right now. So I hope you found this insightful. I'll talk to you later on the Telegram channel. Until then, be safe.